Welcome back to Ozarks Tonight. Well, the stock market here in the United States and the markets around the world have taken a hit over the last few weeks over fears of the coronavirus, and it was the case yesterday as well, as the Dow Jones had its worst day since 2008, and not all of that was coronavirus fears. Other things happened as well that led to that fall. But we wanted to bring Stephen Evans in today with Evans Wealth Planning to talk a little bit more about what's been going on with these markets. Do people need to be alarmed? Do people need to be worried? Stephen, what's your big takeaway from what's been going on the last few weeks?
Hold tight. I mean, it is a wild ride out there right now. I mean, last week we had the market go up 1,000 points, down 1,000 points, up 1,000 points, and then yesterday we were down 2,000 points on the Dow. Today we were up 1,000 points, and then we were down, and now we're back up. So it's just incredibly volatile right now, and there's just a lot of uncertainty in the market. And when there's so much uncertainty, it's best to hold tight and follow your plan. Like, when you invest, you should invest with a plan. And when you do that, you know that the market at some point is going to crash, and that you should have a plan for when that happens. So that's what we tell our clients. It's like, we're prepared for this. We know that this is going to happen. We don't know when it's going to happen. It'd be great if we did, because, it'd be like having a crystal ball to predict the future. Right. But we don't have that. But we know at some point the market's going to crash, and you have to be prepared for it. So I've got my young clients who we're calling and saying, well, we've got a sale right now, and you can go and buy things that are at historic lows. Since, we've bought some stuff for some people that were at 2003 lows. So there's some opportunity there for some people. And then for people who are worried about the virus, and if you hear a lot of reference to 2008, the good thing is we're in a lot better position economically when you look at us compared to 2008. We just had a great jobs number report come out. Incomes are increasing. The Fed took action, lowered interest rates. There's not a liquidity problem. This is not a financial crisis. This is a biological crisis. So there's just a lot of uncertainty, and people are kind of acting a little crazy, but that happens in uncertainty. Definitely,
and the oil market took a hit yesterday as well with something that didn't even have anything to do with coronavirus as well. Kind of talk about that.
Yeah, so that was a lot of fun. So you've got the slowdown of the whole entire world because Italy's locked themselves down, China kind of locked themselves down. So demand of oil has dropped. Well, while that's going on, you had a deal with Russia and OPEC. And it was about production that they were going to put out. And this deal runs out soon. And Russia and Saudi Arabia basically said, we're not going to cut anymore. We're going to do whatever we want. And that freaked the markets out because they could pump as much oil as they wanted to. So there's kind of a price war between Saudi Arabia and Russia. And Russia also doesn't like the United States fracking. So it's this whole global political thing wrapped around with the coronavirus that just completely, oil yesterday, I've never seen anything like it. It was down 30% at one point, which is brutal.
Definitely, yeah.
Especially when it happens overnight and on a Sunday night, and you've got all these people who are trading it and wake up and it's down 30%. It's wild.
Yeah, not what you want to see when you're investing in oil a lot of the times. What have been some of the main concerns that you have heard from your investors over the last couple weeks, and especially yesterday as well?
Is the world going to end? What does this do? And so what I do is I try to tell people about the past. We've had SARS. SARS was a big one that happened around 2003, and the market fell about 15%, and then it V'd right back up. So I try to look at past and then tell my clients, because they call me and they're like, what is going on? And they want me to answer, and I don't know exactly everything that's going on, but you can look at history and kind of see this was what may happen, this was what may not happen, and it's all about sticking to the plan.
Sticking to the plan, and I'd assume, depending on what your plan is, might change your strategy a little bit in situations like this, but stay firm if that's your plan.
Yeah, if that's your plan, or it can provide opportunity to buy or rebalance your portfolio. So if, your bond allocation, you were a 60-40 portfolio, and now your bonds are 50%, it may be a good time to rebalance and get some of those stocks bought because they're at a discount.
Sure.
So rebalancing, it's all good. It's good to talk to an advisor or someone. If you don't know and you're uncertain and you need someone to talk to, that's a great place to go because, I watch the market every day. I've been doing it for 16 years. So when you watch the market for 16 years, I went through 2008. That was brutal. You learn that, we climb a wall of worry. There's always the next crisis. So, there'll be something else, but we'll get out of it, and you know, we're humans. I have to be an optimist, because if I wasn't, my job would be pretty hard.
Yeah, I imagine so. You know, for individuals that are looking to play things a little bit safer right now, what are some safer investments that they can look at in the wake of everything that's been going on?
Safer investments, you know, you can look at municipal bonds are usually a safe place. You can go to your bank, CDs, money markets, things like that. But I would caution against making any sharp reactions right now on selling anything, because it can be detrimental to your plan. Because if your plan is to stay the course, you should stay the course. Because jumping the ship at the wrong time, like in 2009, I had clients, March 9th, 2009 was the exact bottom of the stock market. And a lot of people got really scared, and they jumped out that day, and I could not stop them from jumping out. Well, from March 9th till the end of the year, the market went up about 58%. And those people that waited, and they're waiting for like the next drop or like what's going to happen, if they waited a year, they lost that 58% increase. And that is detrimental to your, that can be detrimental to your whole entire career as an investor.
I guess the most important thing, just don't panic.
Yeah, don't panic and think. You got to think, look at it and go, is this the end of the world? And I'm hoping it's not, because money doesn't really matter at the end of the world. Right.
Hopefully, for all of our sakes, it's not the not the end of the world.
Yeah, I think we're going to make it through this, and we'll look back in a year or two and be like, okay, we were able to survive.
All right, very good. Stephen Evans with Evans Wealth Planning, thanks so much for stopping in and shining the light on exactly what's going on here.
All right, thank you.
Absolutely. We'll be back with more right after this.